Right, good afternoon, everybody. Happy Sunday. All right, so today we're going to have a chat with a couple of cool guys and lady. All right, so Chloe will be joining us later, and of course Lloyd as well. All right, so to kickstart the session, I'm just going to go a little bit about fundamentals. So this is Alexis here. Hi, and I will be covering a little bit about fundamentals today. And we usually start off the session with a little bit of fundamentals, and then we'll do a little bit of Chloe, which is trading the trends, and then Lloyd will come in, and we are featuring his currency strength session today as well. All right, so let's without further ado. Okay, I'm just going to kickstart off, and actually, if I'm not wrong, Julian is here. So hey, Julian. Okay, so Julian has nicely agreed to kickstart our session. Thanks, Julian.
Lexi, hi, how are you? Yeah, I'm going to butt in if I may.
Yes, please.
I've just, look, guys, for those of you who have been, who are part of the team, then we've just had a super session with Ainslie Club on the Trader Cafe. We've just been rapping about the markets and about what's going on at the moment and how we try and, in broad terms, just try and think about trading that right now. And so for those of you that didn't manage to catch it, please get the recording. I think it was awesome. She's an amazing trader. What a great opportunity to pick allow me to pick her brains for like 45 minutes just talking about what's going on. Hey, look, one key message came out. I think I just want to try and maybe share the screen with you just for a couple of minutes, right? Let's just do a quick roundup of what's going on. So what we talked about, right, was what do you do when it's really difficult to trade something like oil? Okay, so when you look at the oil market, I'm just going to pull the oil market up here, and oh my God, what a crazy market it's been for the last few days, right? For those of you that don't see the scale on the right-hand side, this red bar was from 127 down to 104. That is absolutely insane. That is a $23 move. Oh, it doesn't move $23 in a year, let alone in a day. So what I've normally do in these situations, I say, well, I tell you what we'll do, right? We'll go and we'll trade it on a different time frame, because if we can't manage our risk on a daily chart, we'll maybe try and move down to a 4-hourly chart. Have I got visibility there? And when I look at this and I'm seeing, okay, maybe there's some ways that I can maybe see to be able to trade oil on a 4-hourly chart. Look, there's a bit of a trend in here, and then bang, oh my God. This bang, oh my God, that 4-hourly period there went from 119 down to 104. That's insane. $14 in an hour. Oh my God, in 4 hours. That is just unbelievable, right? This is one of the challenges you had. So then I went, okay, that still doesn't work for my own personal risk parameters. Can I go to an hourly chart? When you look at an hourly chart, you're still seeing incredible and insane volatility. Yes, there are some trends that maybe you can look at, but managing risk is incredibly hard, especially if you're trying to get any kind of sleep at all during this time, right? So I said, okay, I'm going to remember the time when I traded back in 08, and I used to trade currencies on 15-minute bar charts, right? Now, maybe I can make some sense out of a 15-minute bar chart. And then I looked at this and I went, oh my God. So for me, oil is getting close to being untradeable here. Now, what does that mean? It means that I can't manage my risk on anything shorter than or longer than a 15-minute chart, which is absolutely insane, right? So if you want to spend all day in front of the chart, maybe you can see some stuff out there. But how about we think about this a different way? We go, this is simply too hard. When I look at this, let's go back out to the daily. Okay. This is simply too hard because we're looking at crazy, crazy, crazy volatility. So what do we then say? Okay, well, if I'm looking at crazy volatility, yeah, there was an uptrend for quite some period of time before things went a bit nuts, and that's a great trading opportunity for us. But right now, recently, it's gone a bit nuts. So where do I go? Here's where you go, folks. Let's look at this. Okay. Okay, now so there might be people on this show who's going to talk about this today, right? But this to me is everything. Here is a market that benefits from the move in all of these resource-based commodities. That's the country of Australia. On the other side, you've got the country of Europe, who right now are the epicenter of some of the problems. They've got the vulnerability on the energy side. They've got the lack of confidence on the political side. They have a central banker who clearly is actually not doing much at all, I think, quite frankly. And looking at the financial sector within Europe, she's clearly not done anything recently to help that particular part of the economy. So confidence-wise, you've got to have a really low confidence of the euro. You've got to have a really high confidence of the Aussie. This is a trend we can trade. This is a daily chart. This is what you should be looking at. So my message today, and I won't take any more of your time, is when you're doing your Sunday night scans, guys, go and look for the markets where you can swipe left or swipe right. Okay, get rid of the ones you don't want and keep the 2 or 3 that you absolutely do, where there's a match. Okay, because you match your systems and your trading methodologies with the underlying trends that are in place, and that way you're going to be successful. Don't try and fight it. Normally, you would say in this situation, if gold's at 2,000, right, and has added 200 points, if oil's at 110, 115, who knows, every 5 minutes it changes, right, but it's not $60, where would you expect the Canadian dollar to be? The answer traditionally for the commodity dollar currencies, especially the Canadian dollar, would be, oh my God, it's got to be miles higher, right? Dollar CAD will be through the floor. Well, is it? Let's go and look at the dollar CAD. And is this the most boring chart that you can possibly find out there at the moment? I'm sure there's some waves in there that you can trade. I'm sure there's something that some people can pick out of that, but I can't see a thing. Why can't I see a thing? Because nobody is focusing on this. In 6 months' time, when they see the balance of trade of Canada completely reversed and they go, oh my God, that's amazing. And they'll start to think about the Canadian dollar differently. Right now, nobody cares, because all eyes are focused on Europe. So that's what you've got to do. You've got to focus your energies on those markets that are moving and not rely on the ones that normally would respond given normal economic circumstances. Don't trade non-farm payrolls. Nobody cares right now. Don't trade inflation. Nobody cares even about inflation. Everybody right now is caring about what is going on to some poor folks on the Eastern and Central European side. Okay, and what the European politicians as a collective are doing about that. That's where the action is. Trade those currencies, and that's when you're going to make money. That's it for me, Lexi.
Awesome stuff as usual, Julian. And on the light of that, I'm just going to do a slot here, and I'm going to post the current trading pair that Julian has just posted, because it's really coincidental. I'm also looking at the same one, plus an extra. Now, the way I'm looking at it comes from a little bit of a different angle as compared to Julian. It's more of a, okay, so the purpose of fundamentals from my perspective is to pick the healthiest currency against the weakest currency, right? So I'm just going to go a little bit unconventional here. Let's look at the map of the world. At this very moment, there's a fight happening, right? At this area where my mouse is, between Russia and Ukraine. So if you talk about human personalities, right, what happens in a fight? So if you go out on the streets and you see fights happening, right? If you're a mom, what you're going to do, you're going to pull your child away. If you're a person who is not part of that fight, you're going to move away from it. So I'm coming from a perspective of a very human nature point of view. If there's a fight happening here, who's going to be affected is the people around this area. And of course, not to mention the person who's throwing rocks over at the conflict, right? So countries that are affected right now are the countries making sanctions. They are opening their mouths and say, okay, we are going to do this, we're going to do that. What they're doing, I don't quite care. What I am interested in is how quiet New Zealand and Australia kind of is. All right, which means when people are fighting, what they do, they're just sitting back. Let's not get involved. Let's not make this fight worse. All right, no big bold statement yet, that has splashed the headlines. A little bit more on a quiet, muted side, maybe a wait and see approach, and that's what I'm more interested in. Because if I was a hedge fund manager living somewhere in the US, Canada, Russia area, I'll be thinking, oh my gosh, what am I going to do with my client's money? Where am I going to put it? Because I don't know what's going to happen because of this turmoil. I'm going to pick a country that's politically stable, that's relatively further away from the entire fight, and I'm going to try my luck and park it over there. All right, and it's purely on a perspective of safety, safety in terms of safety sentiment, right? People would tend to move towards things that seem or a little bit safer, and this is why if I actually did a segment on this on my Fundamentals Sunday, I think a week or two back, I think last week, and I'm going to look at the Euro Kiwi chart. All right, Euro Kiwi chart was one of my favorite charts in the 2 weeks of March. Again, as traders, we're just taking a stand on a direction. And the last Sunday, we actually caught traders with me on the Fundamentals Sundays have already caught this 5 days of move down. And what I do like is, again, Julian did a segment, I think one of the Sundays, and he spoke about, how do we trade through a war, right? How we trade through a war, how we trade through a conflict is be very prepared to make a decision and change a direction. And this is where shorter time frame strategies are really quite powerful here, because what it allow shorter time frame traders to do is to trade the retracement, right? But at the same time, we are very careful while trading the retracement upwards, to be ready for when it's ready to move down again. So last week we spoke about, we have had a huge 5-day week down 2 weeks back, and then last week was a consolidating week in a sense, or retracement week, where buyers might start to come in and test the waters again because price seems like it's really low right now. Buyers who are very bullish on the euro for some reason might come and try their luck. But ultimately, while the conflict is still going on, I'm pretty much bearish the euro until a bit more positive news comes up. And so looking forward next week, I'm going to still look at the Euro Kiwi and see whether we can find any leg room further downwards. All right. Now, again, we are in about the 3rd week of the conflict. It might consolidate a little bit more. It might go down. It might go down. It might go up, but I'm a bit more on the downside. So this is the perspective of the Euro Kiwi view. Plus, Kiwi has good economic statistics at the moment, so why not? Now, last thing along, I think another quick session along, which I won't really cover in detail now, but very interestingly, this news came out on the Financial Times. They spoke about the Big Four facing a fraud exit from Russia. So there are talks about KPMG, Deloitte, PwC, and EY is Ernst & Young, and they are big auditing financial services based companies. And what they are talking about is whether or not they want to pull out of Russia. Now, I don't know whether it's a coincidence, but coincidentally, 4 out of these 4, their headquarters, is in, Deloitte is in London, UK, in terms of headquarters. KPMG is Netherlands. And then, of course, we have London, UK for Ernst & Young is again London, UK. And PwC, PricewaterhouseCoopers, is also London, UK. So my question mark is, will this cause a little bit of fear about the pound, right? So next week, I would like to kind of keep an eye on the pound and find whether there are opportunities to short it, because if the big four financial companies are saying we want to pull out of Russia, I think there's uncertainty created there. And if there's uncertainty there, I think there's going to be worries about whether or not, it's financially stable to put your money in that area in that sense, and whether or not people will start pulling out of the pound as well. So my eye is still on a short euro and maybe a little bit of a short pound, seeing as, there's something's happening right there. So just be prepared. I'm just prepared to kind of take the shot if it comes, all right? So again, follow your strategies. Fundamentals is all about using your strategies to find the entries. And with that, I'm going to invite Lloyd, who's going to tell us a little bit more about what's the currencies of the world doing today. Lloyd, over to you.
Hi, thank you, Alexis. Let me grab the screens. So let's have a look up from the currency indices point of view. Let's see what we have over here. First, so first of all, top of my list is the dollar index. It's been rather bullish for the past 3 weeks. Yeah, but you can see that price is nearing $100 already. Looking at the price action, it doesn't seem like price will be slowing down any soon. So, and we still have a bit of space to actually reach this. So we can actually, for day traders or swing traders, I think we can comfortably actually aim for $100. Yeah. In the past, given that it does actually break this level, so it's not far-fetched to think of that. Now, the next on my list will be the Canadian index. You can see the Canadian index at about $77, 77.5. Price has been rejecting this price point quite frequently, yeah, ever since last year, July. Yeah, so you can safely speculate that once price is ready, you can see that it has imprinted a very nice low test bar. Yeah, have about half a space, $2 more to actually go up to $80 before it resume its range play. Now, the Aussie index, from my point of view, is a bit unclear. I'm unable to see a range, neither am I able to see a trend. That's why I really rank it in the middle. Don't really know where it wants to go. Now the pound is rather bullish. Rather bearish to me. Yeah. In fact, there's more bearish pair than bullish pair for this upcoming 2 weeks. I can see. Now, pound, you can see that it actually gaps down and it just breaks through this level. Yeah. We might see some retracement coming Monday or Tuesday before it resumes its bearish momentum. Now the Kiwi, this is a very, very nice break, retest, another retest. Some will call it a double top at this level. So on saying that this has been tested multiple times, I don't see it breaking anytime soon. So Kiwi might possibly resume its bearish momentum from a bigger picture point of view. Now the Euro index, again, this will be a 1 bar break and retest. You can see that at 110th bearish bar, it tried to go up previous week, yeah, but it failed. So you can see that it prints a very, very nice looking high test bar. Now looking at historical prices, it's not hard to speculate that it might actually venture downwards more. Yeah, it definitely has plenty of space. Swiss, you can see that previously it is very, very similar to the Canadian index range, and then finally it broke. Yeah. So now I'm not in a hurry to actually jump into the Swiss index. In fact, I'm quite perplexed by its movement. Yeah, at the back of my head, I thought that the Swiss and yen were actually rallied because they are the safe haven currencies, but it doesn't prove to be so. Anyway, I'm not on the fundamental side of things. Now, from the technical side of things, you can see that this horizontal level, bearish break, looking for some sort of retracement on Monday and Tuesday, and then we can actually join its bearish momentum. Same for the yen index. Both Swiss and yen, I would say, equally bearish. So carefully pick a side and see which one you would actually jump on the bandwagon. Now, for the currencies that I wanted to trade for the upcoming week ahead, first would be dollar yen. Dollar is rallied quite a fair bit. Yeah, so I'm waiting for some sort of retracement back to this level. You can see that previously we have an inside bar on the H4 time frame, so I'm looking for some sort of retracements or even a deeper retracement back to its previous high. Then I'll be jumping in. Now the next one that I'll be looking for the trade will be CAD Swiss. So again, you can see that price rallied. This will be a huge horizontal level for it to break. So I'm waiting for price to actually do some sort of retracement to previous high, and then I will jump in for a bullish trend. Yep. So these are the two currencies which I will be looking for the trade for the upcoming week. Let's see if it plays out. All right. With that, thank you for joining me. Over to you, Alexis.
Right, so really great stuff today. We had Julian doing the macro view, and I did a little bit of the micro fundamental view, and then we have Lloyd tying up the currency index, right? Which is always, I'm really happy to see, Lloyd, that you're calling the pound short as well. All the more I will be keeping an eye out for short pounds next week. So this concludes our Sunday session today. Thank you guys for joining us, and hope that this week's insight gives you a little bit of preparation for next week's trading. So trade safely, and goodbye.